Good afternoon, everyone. It's Chrissy from Solstice ATR. I hope everybody's doing great on this Saturday afternoon or Saturday evening, wherever you are. I'm going to cover a couple of specific items quickly, make the videos a little bit more shorter, and that way you don't take too much time reviewing it. Remember, we use adaptive algorithm for trading for both sides the market, up market, down market, or side market. We're not a broker dealer. Past performance does not indicate future results. If you like this video, hit the smash button. At the same time, you can subscribe for free. Let's go first of all by talking about how I can assist you by basically giving you a couple of concepts and ideas on support and guidance, how to read the technicals, and tips on your daily chart and 4-hour charts or weekly charts to understand what the overall market's going to do in the following week. Let's go to the next slide. In this slide here, as you can see, I have things to look for in trading for July 23rd, 2022. I have Apple, American Express, Google, you can see it, Microsoft, Netflix, and Tesla. Snap, I should have put VIX, that's the Verizon VZ. I made a mistake here. It's VX here. I put it Nike and BA. XLK, XLV, ETF, XLP, and XLE. I put it twice. And as well, we have here Schwab, Large Cap Growth, and ARK Management. Here I have the bond market, LQD for the private sector, IEF for the government, and IEI is a short-term 2 to 5 year, and the VIX. Over here we have the futures, which is the S&P 500, NASDAQ RU2, and Dow Jones Industrial Average. You can use the ETFs here. Here I have the E-mini, the NASDAQ, the Russell, and the Dow, Bitcoin, Ethereum, VIX, bond market 10-year and 5-year. Most important thing for trading goods, everybody looks at the dollar. Oh my God, the dollar's at the high. It reverted for the last week and a half, came back down. It's consolidating. Remember, this is purchasing goods between international and domestic market. People use the dollar for buying goods throughout the world. Keep an eye on the Aussie dollar, Japanese dollar, and the European dollar. And this is for July 23rd, 2022 slide. Here I have the overall market. What can happen when we have a bottoming in the market? I showed here the 2002, 2008, 2011. These are historical numbers, real numbers that have happened from those dates of those events and the levels where we turned from in 2016, 2018, 2020, where the levels were in relationship to the turnaround, how long it took it in 1 year to 5 year, and what have we compounded in relationship from high to low. If I take a 2-year compounding rate, median rate of return is 42%, and we know the average is about 43. We don't have historical data from 2018 for the 4th and 5th year, neither for the 2020, for the 23, 24, and 25. As you can see here, we have only from 2020 what the compounding rate is from that year till the second year from the April low of COVID-19 that happened on March 23rd. So let's go to the third slide. This third slide shows a 1-year drawdown. In case the market does turn around and we didn't get a bottoming and we get a little slide down, we slide a little bit down from where we are today, an average drawdown can be around 6% to 11%. An average is of about 4 to 5% in the S&P 500 using the same historical dates for the SPX in case the market does turn the opposite directioning before we get a bottoming in the market. Things to consider while you are trading. Most important thing in trading, you have to understand the risk that you put in money, what the economy outlook is, what consumers are doing in relationship to the short term, long term. Is there fear in the market? Is there no fear in the market? Are people buying it, institution putting money into work or taking money out of the market? Don't have a biased opinion, or don't let your ego get stuck because you like a company, because you own it and you hold on to it and you double down on when it's going against you instead of averaging in on the way up when it's doing well, so you can come in and get out of that position to make a profit. So remember to do that. And if you like this video, you can, remember, you can slow these videos down, take the slide, read it, ask us about it, and you know how to get in contact with us. I just want to say thank you for everyone. And I'll go in details about the different sectors that we can look at. You can hit the subscribe button once again on YouTube. You can as well, give us a shout out on a phone or check out our website. And once again, you can hit the like button and subscribe. Let's go now to the S&P 500, NASDAQ, and the Dow Jones Industrial Average. As you can see from 2018 till 2020, bottoming on the 23rd of March, we had a nice rate. If I just take this candle from this low here all the way to this high that happened in 2 years, the rate of return is 115%. Even if I take the rate of return from the January low, you can see this is my January 4th low, to this high in December, our high, we got a 26 rate of return. But the drawdown from that high, from the January 3rd, 2022, till the bottom here, we had a 23.8%. So far, we've recovered from the 23%. We're at minus 17%. Can we continue to clear the 18 simple moving average Bollinger Band, as well as the 116 to do the catch up on the backside of the essential? It is possible. Do we retrieve back down? We can create a little shoulder before continuing to the back to the 38.2 Fib on the charts, as you can see here. That's my 38.2, that's my 50, and that's my 61, where it meets the 50 simple moving average. And the breakdown of this channel that we fell from, we had a prior channel here that we fell through, brought us down, went up, brought us down, went up. We triple topped here at the 55,000, let's call it 180, on the combination of the three instruments. Once again, the S&P 500 can be used as SPY, the NASDAQ NQ can be used as QQQ, Dow Jones Industrial Average can be used as a $ DJA. DJI is the future one, so that way you guys be aware of it. The 200 SMA is here and the 116 is here. As you can see, when we bottomed down here, we touched the August, September, October before the rally happened in the prior year in 2020, and we closed right here. Then the January 4th was the first day that we opened. We closed here, we looked down, pushed up, came back in February, pushed up, we came back in March 1st, rallied up, we consolidated for a couple of months here, like a rounded bottom here. Then we pushed higher, fell back down, pushed up. That was the December, and then we fell back down. So let's take a look at the RUT by itself. We're going to use the RTY, which is the futures, as the Russell 2000. We can see that there's a lot of Fibonacci's here. We know that the February gap was tested here. You can see that's the February 24th, 19. We fell down. March 23rd, we turned around. We came back to this area. Let's zoom into this area before the box. We know where the February is. We tested this area and we pushed up. As we can see on this chart, we are in a linear regression downtrend. We still have not retested the 18 simple moving average, but we came back on the monthly chart. We consolidated for 3 weeks, didn't make a decision. And this week, if this is our bottom, we are bottoming out. And this week we had a push up this far. This tells me we looked up, came back in because we pushed so far in the 5-day range and came back in. And what we're going to do is go to the daily chart. We're going to go time frame. What we can do, go daily. We can go 1 year chart. Okay, everyone, instead of weekly, we're going to go to the daily. And we're going to push OK. So what we want to do here is show you how to calculate the data in relationship to the retracement of the prior week's range, because this was the bottom here. We had a higher high and we pushed up. We came back, consolidated. We tried to look up. We failed. We created like a W. We eventually broke up in the last 5 days. This is Friday, Thursday, Wednesday, Tuesday, and Monday. If I take the bottom of this candle to the wick of this high, in that week's range, we got a 6.4%, 6.47% high. But if we take the weekly from the open of the bar till the close of this bar, small cap did very well at 5.25%. And what I want you to understand, everyone in this market, whenever the dollar changes direction, it's always 2.5 standard times to 3 times what the market can move in relationship to the dollar when it moves down or it moves up. Whether it's going up, that means, let's say it moves up 2.5%, you go 2.5 times that. or 3 times that on the futures going down. And vice versa, if the dollar goes down 2.5 to 3%, you do the vice versa in the market going back up. But we did not consolidate to get a 6% return or 9% return. We got a 5.25% in the Russell. Let's take a look at it on the dollar sign, DXY. And the reason behind this, I want to show you. This was this week's candle, correct? If you notice the last 5 days, this is day 1, day 2, day 3, day 4, day 5. If I take the top of this candle on the weekly bar till the bottom of this, we lost a 1.78% in the market, correct? But if I do not take the wick of it, I take the open of this bar to the close of this bar, we lost 1.22% in the downtrend in the dollar. This means that the market, if I multiply 1.25, let's call it 1 point by 3 times that, that means the market has to shift that much amount in 1 week in order to get the rate of return back up in the stock market. This is why I'm showing you this. This is a little trick. It'll teach you. It doesn't mean that inflation is still here, but does not mean that the dollar, the buying goods, you're losing power. It's just the exchange of goods between international and domestic, has nothing to do with the inflation itself, cost of goods, okay? So let's now take a look at the ES by itself. And what we can do in the S&P 500, you can see I have these little small lines when we actually trading. I put these channels when we're trading the short term on a 4-hour chart to help us understand the direction of the move is going to be up or down. Remove the drawing. And once again, I'm going to show from the open here till the close of this candle. What was the close of this candle? Hold on. Let's see what was the close. That was 39.63, and that is about 39.88 here. That's the close of it. So you gained a 3.26% in the S&P 500. So the small cap has gained quite a bit of ground in the overall market. What I usually do for every week, I take the high and low of each candle. This is the low of it. What we can do to draw the Fibonacci, we activate the Fib from the bottom to the high. And this is our weekly fib. But the weekly fib, what I usually do, I color it a little bit differently. I edit the property and I'll make it a gray area so that way you understand the ranges going up for extension 61.8 and going down for extensions to the bottom side, which has the 38, 50, 61, and 161 going down. And if I duplicate it up and down, it's the same thing. Even if I take last week's range from here to this high, you can see the 61.8 where it touched. Basically, we came to the 38.2 and got nice rejection. Sorry, this is, let's take the 5 days here. I'm sorry. This was this week. So 1, 2, 3, 4, 5. So if I draw it from here to here, so this is our extension coming to the 61.8, as you can see. And these are the reasons why I look for the 80%, 20%, 30% in the market to understand the ranges if I'm going up or down. Let's take a look at AAPL, and I'll do them very quick. You can see Apple did quite a bit of move in this weekly. Fibs shouldn't be up here. The weekly should be activated. And what we can do, we know that Apple came up to this area. I know they're going to be a little bit of a slowdown in Apple. You know, they're producing new products and stuff, and they are not hiring new people, so they are a little bit tightening up. You can see what Apple did this week. I can go to Meta, same thing. I can show you what Meta did. It lifted, came back in. We can go to Google. You can see Google came back a little bit down on the split of the stock. It split 20 to 1. You can see it here, Google and Google. This is the split when it fell back down. They didn't buy it. They just gave it away. Netflix, NFLX. This is the first time Netflix for the year has regained that bottom since that earning gap that we had. We're just going to zoom in this here. You can see where the wick is. It has quite a bit of ground to go, but if you look from this channel to here, oops, I used the Fibonacci. If we get a channel here, we zoom in this area, and you can see from this, oops, I still did the same thing. if I take this high here to this low here, you can see the breakout. This is the first time that Netflix finally breaks out of this channel and goes up. In the last 5 days, it looked up because they did like a 1, 2, 3 triple bottom, 4 bottoms, and eventually broke up. This means it has to clear this channel in order to run up and fill the gap. If it cannot take this candle, pay attention for the consolidation and the retest of this area and this area before another buy zone comes up in Netflix, if it's going to run or not. Let's take a look at Tesla. And what I want to do, teach everybody how to use a trading on a 4-hour chart. This is the measured move on the monthly. I don't want to talk about it. You want to know about it more, you can come into our group, ask how. I'm not going to teach how I use the measured move, but I can teach you guys how to look at a Fibonacci and try to calculate a trade on an earning report on the charts. So what I want to do is go on the weekly chart and just go to a 15-day 4-hour. And what we can see, that's the earning report. We can see that this top and this bottom was a low, and we have a high, correct? So this bottom and this high, when we did the earning report in the afternoon, this was the report. If you look at the spike on the top corner here, you'll see the price on it. If I put my mouse on it, you see that the high was 778. This high was 778 on the chart. So we know the following day, if I'm going to break up through this chart, and I'm going to show the overnight action, we're going to go to style, we're going to go to a setting. In the setting, we're going to highlight the equity, the overnight action. And by using the overnight action, it allows us to see the price in relationship to a gap up, a gap down, and the earning, because it was consolidating on a grind up. You can see from Friday, the Sunday action where the low was on Tuesday. If I take this low here to this high here, that gave you almost an 18%, 18.5% in the market, but nobody's going to catch it. Let's say nobody brought this area, they waited for the earning report. We know we had the high here, we had the low. This was the overnight action. If you notice, the high of this candle is at 772.50. And we know that the close of this candle in the trading hours overnight was 764. If you look at this low was 763.50. Let's say you did not buy the close of this candle. You waited till you broke above this candle, correct? If I take this candle to here, you can see it, that's 778. That's giving you a trade in the market. So what I'm going to do, without looking at a price action, we know this is our low, this is our high. You can see that. And if I just took the prior day's range from here to here, this is a breakout trading to the 80% and 100%. What I'm going to do is edit the property. I'm going to make it gray color, okay, everyone, so everyone can see it. And we can say, if we duplicate this fib up, I'm going to duplicate the drawing, and I'm just going to grab my 100% to the 0 line, and to show you it did 200% rate of return in 2 days. Tesla, that means when it gets to the 20% and 100%, it's overbought. It's time to take profits and walk away from the trade, or leave some as a runner from where you purchased it. So I'm going to remove this drawing. Remember, the breakout was 778. And if you did not take this 778, you took something a little lower. I'm going to remove this, and I'm going to show you this a little different. I'm going to show it on a 15-minute bar, showing you the trade, how it would have happened the day before. There's our range from the prior day. We're not going to talk about the last day. This is the low, this is the high, this is the low in the trading, after hours, and this is the high. If I still take this fib from here to here, you can see the extension where the 100% is. But if I look at this price action, I know that this was the overnight early morning European zone high, and I know this is the low. If I take this range and I take the break out of this candle, or I take the break out of this candle, my Fibonacci is going to tell me if I take these two, my extensions is to the top. And if I take this one here, I'm going to get the 261 to the top in the charts by taking the break out of this candle, going up, coming, retesting this area. You can see it, this candle here. Let's say you didn't get in here. It came back and retested a portion of this candle and a portion of this candle. And we went up. This is 100% trade in the overall market. So let's take a look at a couple of ETFs. We're going to go XLK. We'll start with the XLK, and we'll go back to the daily charts. And what we want to do is understand the overall market on a weekly bar in relationship to the move. We can see the January, February low. We retested it, and now we're starting to break, and we retested the 18 simple moving average on XLK. Does this mean we're going to find consolidation a little bit here before continuing to the 38? Pay attention to what the price action is in the tech sector. That's the tech sector. Let's take a look at XLP. XLP is the consumer products and staples. We can see we are consolidating for the last four. It hasn't moved high, but it moved up from the 116. We cleared the, we're coming to the 38. We tested it a couple of times. Does this mean we hold the 38 to continue to the 50 and the 18 simple moving average, or do we fall back into the 71, 125 before continuing? Let's take a look at the XLV in the healthcare sector. XLV is doing a similar thing as consolidation. If I take a look at the XLF, the financial sector and the banking sector starting to find a little bit of ground, and it's testing the 116 simple moving average. Let's take a look at XLE. The energy sector, we had the drawdown. We are consolidating. Let's pay attention to that. And let's take a look at the AARK, ARK Management. Remember what I said about ARK Management about a week ago in my video, if you're paying attention to them. On the weekly chart, we're starting to break by time and consolidate. If I zoom in this area, the price action was retested at the 47.50. Does this mean ARK Management is going to be able to clear those three soldiers that brought us down to continue higher or not? Pay attention to ARK Management, because, you know, everybody beat it up, and I'm one of those people that didn't like, you know, the product itself due to the way it's managed. Let's take a look at the bond sector, IEF. And what I want to do in the IEF, you can see that the 7-10-year notes, because of interest rates in the Federal Reserve, what they are doing in the market, I want people to understand this. If interest rates are going to get another 75 basis points from the Federal Reserve Board, and there's going to be a slowdown in September of interest rates by next year, basically they turn it off and they may start printing more money like they usually do to resolve an issue. We're starting to see that interest rates are slowed down and the par value of that bond is starting to creep up. And we can see it in the TNX. It's an inverse relationship to that bond market. This was the channel that came in way from 2000. You can see it 116 of 2010, 16 of 2018. This was the first time we break up. We look above. We're coming back down. We're underneath the 18 simple moving average. Pay attention to the F3 on the weekly chart in TNX. But I want to show you as well. I put a bond ETF in the platform, and what I wanted to do in that bond, I wanted to show some people why I want to use it in relationship to the overall market and understand why I want to use it. It's LQD, and we can see that LQD, the iShare, this is showing that the corporate bonds and the corporate world are starting to find some life and opportunity in the market. Does that mean the money management firms starting to put money, taking money out of the cash side and starting to let it work in the market? Possibly, because we had a large volume in the market coming in. And what I want to do is show you the advanced decline line on the NASDAQ. What we can use is a dollar sign NAH1D. And what I wanted to do was this kind of show you that the volume when it came in, this is the weekly. We're going to go to the daily chart or the 4-hour. I can use the daily 1 year. I want to show that the volume started to spike up on the profile on the NASDAQ high return when we were coming down the overall sell-offs were starting to lighten up. The volume was light. When the volume comes down on 3-week consolidation and the volume on the sell-off is lighter than the volume on the buy side, it tells me, hey, something is going on. And what you can do is by looking at, for example, the SPY, the electronically traded fund for the S&P 500, what I want to do is go to detail, go to style in the setting. I want to go to equities, and what we want to do is show the volume at the bottom. And you can see on the right side after the sell-off, we started to get a little bit nickeling volume to the upside. And you can see that in the RTY or the IWM. Hold on, IWM. We can start to see that the volume was disintegrating after these sell-offs. You see, this run was low volume going up. They dropped it on more volume. They tried to rally it up on low light volume, tried to rally up. This volume here that came in that day started to spike, and we got consolidation to the upside. If I look at the for the QQQ as well, you can see that the volume is starting, instead of being, to the downside very sharply, it's starting to pick itself back up. And that's what I wanted to let everyone know about. Let's take a look at BTC. And Bitcoin has found a rounded bottom. I talked about it in the last 2 weeks video, and I said, hey, this is a W. Look for the breakout of this channel. Try to tap into this gap. We have a gap here. We pulled up, came back down. We hit the January. If I go back 3 years out, and I go back to 3-year weekly. Oops, we did the hourly. My fault. We go 3-year weekly. We can see on the weekly, this is this was from if you go back to 3 years ago, where the rally happened in November, because the COVID situation and stuff. We came back to that level before we had the breakout. You can see this area. We tested this candle. There's a gap here. You can see it. We actually filled it by falling through it, coming back to it. There's my candle. There's this candle. It says 24,210, and that was 24,300. Tested and failed back, holding the 200 SMA on the weekly. Does this mean that BTC is going to find a little bit of ground here on the backside of this consolidation before continuing back and clearing the monthly measured move at 25 to 28,000, or does it consolidate back to the 21,700, 21,175 before continuing higher? Pay attention to that price, because it is in a very critical area. There's a lot of people were betting to come down to the measured move down the bottom, which is around 15 to 12,500. So BTC has found some ground. I haven't been showing ETH at all, Ethereum. This is Ethereum. I probably have the wrong monthly measured move on it. I'm just going to leave it alone. I could take this fib off, just remove this drawing. Where is it from? Let's see. Edit the property. I'm just going to look at it. It's from May. So this one's no longer valid. So we can get rid of it. So remove drawing. So we can see that it started to come back to the backside of the wedge of the channel, looking up, filled the gap, retested down, fell inside it. Does this mean it's going to find ground to continue to come back to that backside of this channel? Just pay attention to Ethereum. Let's go to crude oil CL. And what I want to say to everybody in crude oil on CL, you can see that CL, when Ukraine, Russia, they spiked it up, brought it down, they spiked it up, and it fell back to the $93 range. It did test the 250 SMA, bounced up, came back down. This week was an inside week, but a down candle. If I take the study off, it'll show it on the daily, and what I wanted to show is there was just a little bit of a sell-off in crude oil. Does this mean it's going to continue lower to the 88? We know we tested the 93, 91, $90.50. In order for crude to continue higher, has to hold the 200 SMA to come back above the $102 in order to continue higher. If it falls through, I would like to see the backside of the 88 before continuing back up in crude oil. Let's take a look at GC, gold. GC, when everybody used to think that gold was the fear gauge in the market, I duplicated these measured move, and what I'll do, I'll use the GLD instead. This makes it a little bit easier for everyone to see on the weekly chart. Let's go 3-year weekly. And what I wanted to show is in here that we were in a linear regression uptrend. Then we fell down through that linear regression. We were grinding. Eventually, we consolidated, broke up, almost double topped, and we fell down. We tested the backside of this channel on gold. Does gold mean that it's going to hold the 100% of the annual March low of 2021? Possibly. If it doesn't, you would look for the backside of the 200 SMA in this gap to fill in gold before continuing up, because I don't see it pushing. I know everybody's looking at the 157 and the 1695 in GC. So pay attention to this price. If this channel holds it in order to break back up above this linear regression downtrend and this backside of this one, which is the purple one, which is around 163. If it does, that's great. If it doesn't, pay attention to it. And let's go last but not least to the let's do micro and Q because it's got a little bit less charts in it. You can see we retested the breakout of the March low of 2020. We consolidated in this box. You can see the low of it was around, 2/3 of that move down. We pushed up. We retested almost the 18 SMA, and we are above the March low of 2021. Let's see if it's going to continue to the 38.2 or consolidate before continuing higher. And if you have any question, once again, please check us out at Solstice ATR. Give us a jingle, or you can DM me on Discord. Take care. Over and out.